There were some announcements pertaining to mortgages.
Yeah, perhaps we'll even discuss our forecast, an early forecast, which we don't usually do.
Well, I was planning on talking a little bit about that today,
All right.
so I might surprise you.
Maybe I'll surprise you. Hey, what's up, everybody? Welcome back to the Real Estate Podcast. Today, Ariel and I are talking about the new mortgage changes, but not just the changes that are here, but how they affect you. We're putting this into context, so hopefully you get some value out of it. Enjoy.
Welcome to the Real Estate Podcast, your go-to source for raw, unfiltered stories and expert tips. Whether you're a buyer, seller, tenant, landlord, or realtor, join us as we dive into the world of real estate.
I watched a video. There's a guy, I don't know his name, Australian guy, and he does a lot of stand-up like speeches, whatever, like TED Talks and stuff like that. And he talks about changing your personality. And there's one interesting one. He's like, you can change who you are completely and become a new person. It could be your voice, how you dress, how you act, your mannerisms. And then, people are like, well, it feels really doesn't feel like me. It just feels disingenuous. And he's like, well, that's just because you're so used to you for the last 30, 40 years, but you can be anybody. So now I'm going to
be a cowboy.
Be a cowboy.
Great. Adrian went to Nashville and he's always wanted cowboy boots. So he's rocking his cowboy boots today.
Yeah, for those watching on YouTube.
Also got a hat, a cowboy hat. Where's the hat?
I'm not yet comfortable wearing the hat.
Yeah.
But
I find that might be a little ridiculous. Now,
I think it's a good look, personally.
You see, I've known you, though.
It's very uncommon. Yeah, you have.
Since
20 years or something. Whatever it is.
Over 20 years now, or about 20 years. Yeah. And back then, you were kind of like pop star kind of.
I used to straighten my hair with a flat iron and
right
when I had hair.
You had a lot of hair.
I did.
Yeah.
Yeah.
And used to dress in like fashionable
like name brand shit.
Name brand, trendy kind of clothing.
Yeah.
Oh, how the times have changed.
Yeah, but I feel this is like in my roots. Like if there was such a thing as long as
you're comfortable, man.
If there was another life, I feel like I would have been more country. I used to go to a ranch when I was younger to work for a little, few weeks over a couple of years. And they had a barn and horses and I loved it. So.
All right. Speaking of times are a-changing, there were some announcements for some changes pertaining to mortgages.
Yeah.
That's what we're going to talk about today.
Well, the next couple of podcasts revolve around things that could have a big impact on the market. And maybe in one of them, perhaps we'll even discuss our forecast, an early forecast, which we don't usually do for 2025, which I think is important for people that are
What do you mean? Every year we provide a forecast.
Yeah, but usually in December.
Oh, you want to do an early forecast?
I think it would be beneficial.
Well, I was planning on talking a little bit about that today.
All right.
So I might surprise you.
Maybe I'll surprise you.
And in a couple of weeks, we actually have one of our mortgage brokers joining the podcast as well.
Yeah.
So he'll be able to provide insight from what they are seeing from the mortgage side of things and maybe even dive deeper into these topics.
And he usually sees changes before we do.
Right.
As far as applications coming through. And that's usually the first step.
Yeah. They have the first pulse on the market, really.
Yeah.
All right. You want to talk about these changes?
Yeah, definitely.
So the first one, maybe the most important one.
They're all fairly substantial.
They are. The insured mortgage cap is going from $1 million to $1.5 million, a 50% increase, which now means that you can purchase a home up to $1,499,999.99 and have an insured mortgage on it, which means less than 20% down. It also generally means a lower mortgage rate, because when you have a mortgage that is insured, you can usually get a better mortgage rate because of it.
Yeah, that one I've monitored that a little bit over the last few months even, and it's usually minimal. It's like
now it's more
0.01
minimal
or
because
0.02
I find the lenders right now are really, especially the big banks, are really battling for people's business. Like they're out there hungry to get your mortgage right now.
Yeah.
So I think it's a really good time to get into the market, and we'll talk about that. I think it's a good time to get into the market with a variable rate and potentially wait until it does come down and then lock it in later.
Yeah. Had the discussion with someone yesterday. He called me an hour before he was going to his mortgage agent to ask my opinion of fixed versus variable. And I said, well, I'm no mortgage agent, but I think variable right now would make sense. We know the direction of rates is likely to trend downwards. It's easy to change it later, minimal cost to get out of it and lock it in. So I think that's a smart decision.
With your lower octave, if you're also speaking a lot softer, Robbie's going to have fun editing this.
I'm not intentionally speaking.
Usually you
deeper.
speak really loud.
Do I?
Yeah.
Well, I do when do you, you say I'm loud on the phone.
You're extremely loud on the phone.
Yeah. Well, it's got to go a long distance.
Yeah.
One thing I don't think people consider, like there's a lot of chatter about the amortization change, but I think one thing that people who aren't immersed in the industry don't take into consideration about how it could influence resale values, home values, is homes that hover around $1 million. There's a lot of times where, let's take some examples of townhouses in our community in Milton. There's a lot that are selling like 999,999 or 999,000.
We've
Whatever
had
it is.
that with some of our listings where that was the cap because of the
absolute barrier.
Yeah. So now that's obviously thrown out the window.
Yeah. And for people that don't understand that, it's just simply because if you pay $1 million, your deposit goes up significantly. And
your
a lot
down
of people,
payment. Your down payment.
Yes, sorry, your down payment. And a lot of people just didn't have that money.
Right.
Or would rather not do it. So there is this barrier for certain segments that kept the prices under $1 million. And now that's gone.
Yep. Yeah. So if you go up to 1.1, you theoretically could still put a 5% down payment.
Right.
So I want to talk a little bit about how that's going to affect the market, certainly for the balance of this year and then going into 2025, because my crystal ball, if you want to talk about predictions, is that 2025 is going to be what?
I think our balls are the same this year.
Oh, yeah, are they? Yeah. Well, we
usually have different crystal balls.
Yes. Well, we're also going to have to do a recap because going into 2024, we did our projections.
Yeah.
And they were different projections. So we'll see who's right.
We got to wait for December.
Yes, that one we'll have to wait for December. So for those of you listening and watching, make sure you subscribe and follow because we're going to see who's right and who's wrong. But this going into next year, I think, you and I are, for once, our opinions are very much aligned that it's going to be a very good year in real estate in terms of sales volume and in terms of average sale price.
Yeah.
So why does that happen? We'll talk about that. I want to go over the other changes that's going to affect the market. So one of them being amortizations now have been loosened up a little bit with longer amortizations available for first-time home buyers and for buyers of new builds.
I don't understand the reason. I haven't put a lot of thought into it, but I don't understand the reasoning for doing that and excluding resale for second or time buyers or whomever's that's not a first-time buyer.
I tend to believe we might see that change.
Yeah.
And it being right across the board versus specifically segmented to those two types of buyers.
See,
but I can tell you why they've focused on those two is because better affordability for first-time buyers, younger people,
first-time buyers, I get it for sure.
First-time buyers, so new immigrants, younger people, whatever, they want to help them get into the market. So they've increased the insured mortgage cap to 1.5 million and now extended amortization. So your barrier of entry is lower and your monthly carrying cost is lower. So essentially making it more affordable to get into the market. With the new builds, they're just trying to spur more activity because the more new construction that is sold, the more applications that will go in. And I think in our next podcast, we're going to dive into, the applications and what's happening behind the scenes. But they're trying to spur activity. So I think it's very, very a strong move to help the real estate market really bounce back, because over the last 18 to 24 months now, since we started seeing some of the activity dip off in terms of sales volume, started seeing the interest rates rising to bring the inflation down. Now inflation is at what's considered an acceptable level. Sales and pricing right across the GTA have been pretty stable. So I think this is going to spur a lot of activity.
Well, I think it not only encourage and provide support to developers to encourage more new construction, but also potentially take away or discourage or slow down investors that are buying resale and doing renos and flipping and stuff like that.
So how do you think, and I'll give you my opinion, but I'll ask you first, how do you think this is actually, why is it going to affect the market? And how do you think it's going to affect the market in the next 30, 60, 90 days?
Well, I mean, it's made it more affordable. I mean, the biggest issue is still supply and demand. Always is. I mean, there's obviously other factors, as we've seen with the interest rate hikes over the last a couple of years, and how that's impacted things, because people always said, oh, it's only supply and demand. Well, obviously that's not the case. Affordability is a factor, and the interest rate changes just made it not feasible for many people to buy. So everybody put things on hold. So this will change that. So rates have come down. They will probably continue to come down. The extended amortization, the lower down payments, and there's a lot of changes that are now going to bring buyers into the market. And I think buyers are a lot more confident now than they ever have been over the last couple of years. And I'm hearing that in conversations with people. We're getting a lot of calls with people that are now contemplating moving. And these are all indications that kind of give us insight into what's to come before you start reading about it in the paper or online.
Yeah.
So I think we're heading to a busy spring. I don't think things will go crazy like we've seen in the past, but it'll be significantly more activity. And I don't know what numbers I'd throw right now, but higher, the prices will go up significantly more than they have over the last year or two.
It depends on supply.
Yeah.
So there's enough inventory on the market right now that it's a pretty balanced market, right? It's not a buyer's market. It's not a seller's market. It's relatively balanced. And, I'm talking about our trade area, Halton and Peel region, and immediately surrounding areas. I can't speak to what's happening in Whitby as an example. I don't know. I don't follow that market. But if the supply over the next 30, 60, 90 days isn't keeping up with the sales, that means the inventory levels are going to go down, and it typically goes down going into the winter months. And that's why we see oftentimes an early, quote unquote, spring market.
Mm-hmm.
Last year it was a little bit softer than normal, but
we still saw, if you look at it from a graph perspective, you would still see a spike around the same time.
Right. So what I think it's going to do right now, because again, with this insured mortgage cap now being increased 50%, we are going to see a lot of activity in the under $1.5 million price range, which, obvious reasons, first-time home buyers, new immigrants, people trying to keep their budgets down. Like, there's going to be a group of the population that all of a sudden finds themselves in the real estate market again, or now. So townhomes. I don't know that condos, because there's a lot of inventory for condos, especially if you go to the Toronto areas. Even you look at Milton now, all the condos that are on the market, a lot of speculative buyers that bought a few years ago, and now they've listed the place for sale because if they rented it, they'd be in the red.
Oh, you got tons of them closing now as we're going to occupancy now.
Yeah.
As we speak.
Yeah.
A lot of them renting out.
And quite a few buildings being built. So the competition for condos in Milton. Oakville is not as intense, but same thing in Oakville and Burlington. See a lot of condos. But townhomes, smaller detached homes, or less costly detached homes, we'll say, I think they're going to see a big spike. So what happens with the sellers of those homes? Well, oftentimes, if they bought their home 5 to 10 years ago, which the average seller usually falls within that range, they've got equity in it.
Yeah.
So now they're going to take that equity. They're going to see the rates are coming down, and they're going to upgrade, which it takes time for that upward trickle effect to happen, but it's going to happen. So now all of a sudden, if you have a townhome and you sold it for $1.1 million, now you might be in the market for something that's 1.5, 1.6, 1.7. And then that person sells. Well, now they want to upgrade because rates are coming down. So now they're looking at 1.9, 2 million, and so on and so forth. So it takes a while for that to snowball.
Yeah.
But it's going to happen.
Well, and with the change in the insured mortgages going up to 1.5, I think when it was at 1 million and we had that threshold for townhouses, who are often first-time home buyers, we saw that barrier because of the limited down payment. Now that it's up to 1.5, I don't think it'll affect that segment so much because most people spending in that range are likely selling a property and have more equity to cover the 20% down anyways.
Right.
Because not many people can afford a mortgage with 5% down on 1.5 million. So I think that will now become a thing of the past, essentially. There's certainly going to be exceptions, but I don't think we'll see that so much. So I'm just thinking like my house and your house are kind of in that range.
Right now.
But I don't think that will hold houses to that number for the same reason it did townhouses.
No, and again, I'm speaking in terms of Milton because the numbers change if you go into Oakville. Burlington and Milton, very similar. But if you go into Oakville, a townhome still falls into that $1.5 million category versus Milton, where it's kind of like 1.1, 1.2 would be your cap.
Yeah.
So you take a 2,000 square foot detached double car garage home. Today, you can buy something between $1.2 and $1.4 million pretty easily.
Mm-hmm.
Will that be the case going into 2025? I don't know. I don't think so. I think that those type of homes are going to see a lot of activity, and it makes sense. So good news for buyers, good news for sellers. Is it a good time to sell? Is it a good time to buy? Yes, there's reasons to believe that and I'm not a big fan of saying, oh, this is a great time to buy because, and there's lots of quotes out there. I think Sherry posted one the other week about the best time to buy real estate was 5 years ago. And that's the case, right? The best time to buy the Facebook stock was 5 years ago, like whatever.
There are certain exceptions. Like right now, I have a couple people that have been on the fence about upgrading. And upgrading your home, if you're going to a more expensive home, it's better to do it in a down market because as a percentage, the gap is less. So it's cheaper for you to make that change. I'm encouraging a couple of people right now and investors. I got one particular couple that want to buy their first rental property. I'm really encouraging these people to buy, certainly in the next couple of months, because their money is going to be harder to upgrade, not as feasible for a lot of people, and because the gap's going to be bigger. And for investors, your money's just not going to get you as far.
Right. Anything else you want to add to this? So the amortization going from 25 years to 30 years, again, for first-time buyers and buyers of new builds. All this is going to do is keep your payments a little bit lower, more attractive on a monthly basis, carrying costs.
Yeah, the one other thing that I don't even know if I knew about, but I pulled it up today, is that if you are coming up to renewal and you want to renew your mortgage, currently you have to go through the approval process if you want to go to a new lender.
Yes.
And go through the stress test. They're removing that.
Oh, right. I forgot about that.
Right now, it's really easy to renew your mortgage.
On your principal
residence. It's really easy to renew your mortgage with the existing lender. You basically don't have to do anything. You just, they'll give you whatever rate and you try to negotiate with them and whatnot. But the negotiation factor hasn't really been very strong for people because sometimes they can't go elsewhere.
The market. Yeah.
Yeah. They can't go elsewhere, or it's just a lot of work. But now if you don't have to go through the stress test,
right,
it makes it so that banks need to be more competitive.
It's I relate that to, you remember when you had a cell phone and it was locked in with your company, and then they removed that. Now all phones in Canada are unlocked.
Yeah.
So you can call up, tell us, and say, hey, I'm just switching over to Rogers.
Yeah. It's great for competition.
For sure.
Yeah. So I think adding that into the mix, I think it'll
That's a good point, actually, because there's a lot of mortgages that are coming up for renewal this year, next year, certainly next year.
Mm-hmm.
Those people are probably, thanking their gods because of the rates coming down. And now you add that into the mix. So you got competition, rates coming down. There's all these different angles that are aligning the stars to increase volume and increase the price. And
you know why this is all happening?
Tell me, Adrian.
There's an election next year.
Yeah. Yeah, there's an election. And, the U.S., if we look at what's happening in there, well, they just reduced their interest rate 0.5%. Mm-hmm. So interesting what's going to happen in October.
We often follow suit. Although we haven't, there's a couple times, I think, recently where they didn't change it.
In the U.S.
And we still did.
And we did, yes. Yeah, but could we see a 0.5-point reduction in October? Bum, bum, bum. Stay tuned for more.
Yeah, well, on my recent trip to Nashville, we went with a couple friends we met on a vacation a couple years ago from the UK. And he owns a construction company. And he said it's been a relatively slower year, but he's got a lot of quotes out for next year, more than usual.
Yeah.
So if you start looking at all these different industries, you're hearing a lot of the same thing.
Which, unrelated, but if real estate activity picks up, which we are projecting, contractor work picks up. So if you're thinking of doing something in your existing home, yeah, I'm looking at you because you're getting quotes for doing some things around your house. Mm-hmm. But if you need a contractor to do something in your house, you might want to be talking to them now, mm-hmm. because we will see a lot of unavailability.
Yeah, we're going to go through a period of time where it's going to be really hard to get people in.
Yeah, it
already is, and well, not so much now. Like the guys I've had coming through, some of them are saying that it's really slow.
Yeah.
But that's going to change
Yeah.
as the rates
as soon
come
as people
down.
have more money available to them at a cheaper cost,
But not only
they're going to go back to spending.
Not only
Canadians
the fact,
are good at spending too.
but not only that they're going to go back to feeling comfortable spending or being able to spend, but that half of the workforce have gone back to the one guy I often go to for floors and stairs. He had, I don't know, half a dozen guys working from him. They all moved back to Poland.
Yeah.
Right?
Yeah, I think you mentioned that in a recent cast.
Yeah. So there's going to be there is a huge shortage of trades people, certainly good ones. Combine that with an influx of customers, people wanting to spend money.
Yep.
It's going to be a challenge. So book it in soon.
Yep. So we'll wrap up this episode. And next week, we're going to talk about what?
I think what we're talking about next week is changes to the vacant property tax in Toronto.
Oh, right.
And how that will influence things in the market as well.
Yep.
Maybe the same, maybe different. You're going to have to tune in to find out.
There you go. Well, if you're thinking about buying, selling, leasing, investing, we haven't talked about investors.
No.
This is a great time. We saw investors just, again, we were going to end it, but side note, we saw investors bailing on a lot of rental properties over the last couple of years. I think there's going to be a bunch getting back into the market now and over the next few months and certainly into 2025. Rates coming down, prices are low, prices have bottomed out, rates are coming down. Like the stars are aligning for investors.
Well, I have a couple who are customers of our property management company, Renty, that were contemplating selling this year because it wasn't really feasible to carry it because they were out of pocket a lot of money. And I convinced them not to because I think if they can weather the storm for a year, if that, they'll be in a really good position.
Yep. Something to consider. If you have any questions, comments, you need some help buying, selling, you need a consultation.
Free consultation.
Free consultation with one of our realtors. Call today at the number below. We'll see you next week.
Ciao. Or maybe I should come up with a new thing.
Cut.
Thanks for watching. Hopefully you got some value out of this week's episode of the Real Estate Podcast. And if you agree with us, get the ball rolling, start the process, get your mortgage approval because 2025 is going to be a big year compared to the most recent. Thanks for watching and subscribe so you don't miss out on next week's episode.